Hey everyone, Matt here again from Sferica Trading. Hope you're all doing great. So, today I'm actually pretty excited because I'm bringing you something a bit different, something that's been requested a lot by our community. This strategy focuses heavily on reversals, especially useful in ranging markets. And here's the twist. We've integrated DCA, dollar cost averaging, into this setup. Now, to be completely transparent, DCA isn't typically something we use much ourselves at Sferica, mainly because the risk is higher than our standard risk profile. But you guys asked for it, so we've carefully built it into this strategy. Alright, so what's the secret sauce behind this setup? Well, at its core, we're combining a series of weighted moving averages, WMA, with RSI, Bollinger Bands, and a fantastic momentum oscillator called WaveTrend. Together, these indicators do an amazing job at pinpointing reversal points in sideways markets. Let me quickly break it down for you. First, we use a sophisticated series of weighted moving averages, each one building on the previous to give us a crystal clear directional bias. Basically, when the price moves above or below these averages, we're getting a strong indication of market sentiment shifting. But of course, we never rely on just one indicator. Confirmation is key, right? For that, we've layered in the RSI and Bollinger Bands. The icing on the cake is our proprietary Sferica Oscillator, designed to accurately measure price movement exhaustion and identify potential reversals with precision. Here's how it works. For short entries, we're looking at the RSI moving into the overbought territory, combined with price action touching the upper Bollinger Band, and then retracing slightly back inside. Plus, we confirm momentum exhaustion with the WaveTrend indicator, signaling an overbought condition and our oscillator out of the defined range. Once all these signals align, we confidently enter a short position. And naturally, it's the exact opposite for long entries. RSI dips into oversold territory, price action touches and then bounces from the lower Bollinger Band, WaveTrend shows oversold conditions, and oscillator out of bound. Simple, yet remarkably effective at spotting reversals. Now, let's talk about DCA. Again, I want to stress this. It's powerful but risky, so please, always use this carefully. With our integration, DCA entries are only triggered if there's adequate space between orders, preventing you from piling up too many positions too quickly. Plus, entries for DCA are further confirmed by candle color, meaning we only average into positions if the current candle aligns with our directional bias. This helps manage risk and ensures we're not recklessly averaging down. This strategy, especially when using DCA, works incredibly well on forex pairs and is particularly suitable if you're involved with prop trading firms. Just set your maximum drawdown to match your firm's requirements, typically between 4 and 6%, and you're good to go. You can see some clear examples right now on the chart, illustrating real entries and DCA points, so you can see exactly how this plays out. Additionally, the performance across forex pairs has been quite impressive, typically achieving between 200% to 400% gains over a 4-year span, while keeping drawdowns usually below a 20% maximum, as you can see in my equity curve right here. Many others are really similar. You have full control over your risk allocation, adjusting it to suit your preferences. In this example, the average monthly gain is around 3.5 to 4%, but you can reduce the allocation to lower both drawdowns and gains. An essential factor for prop firms, for instance. Ultimately, it all comes down to your risk appetite. I also recommend diversifying these setups across multiple assets and shifting allocation where it's most needed to optimize performance and reduce risk. Again, the beauty of this approach really shines in ranging conditions. It captures reversals with impressive accuracy. But remember, like every strategy, it's not foolproof. Always align it with your risk tolerance and trading style. If you want to dive deeper into this, or you're curious about tweaking and automating strategies like this, definitely head over to our website at sfericatrading.com. We're always here to help you navigate these advanced tools safely and effectively. All right, that's it for today. Trade smart, stay disciplined, and always remember, data has a better idea. I'll catch you in the next one.